Back now to elections in France and Greece and that power shift in Europe. There's been a backlash in both countries against tough austerity measures that are helping to drive up unemployment and push a number of countries into recession. Enough is enough seems to be the message from many voters. So will today's election results make it hurt Europe's attempt to get on top of its debt problems? James Shugg is a senior economist at Westpac in London.
Oh, well, I think in France, they're certainly going to hurt. I mean, if Hollande were actually to follow through with some of his election promises. He talked about lowering the retirement age and raising the minimum wage. That does three of the things that European countries shouldn't be doing at the moment. It makes you less competitive, less productive, and increases your indebtedness. Although I think a stronger French voice against the Germanic austerity possibly could deliver some favourable outcomes. So it may not be all bad on that front. But look, the Greek election result is really the one that's going to be of concern. The issue there is that it looks like they'll be ungovernable. And even if there is some form of anti-austerity coalition that manages to take power, they're going to seek a new bailout. Either way, it risks full-on default by Greece, which would be certainly harmful for markets via the contagion effect into the rest of Europe.
So is the mood shifting? Are people, or their governments in Europe, deciding that they've had enough of austerity?
Look, if investors take the view that that sort of public opposition to austerity is brewing in other parts of Europe, particularly Italy and Spain, then they're going to demand higher interest rates to lend to those governments. That could push Spain and Italy back towards bailout territory, which would be a much more difficult deal to organise. I mean, it could even force the European Central Bank to expand its bond buying program, to get involved in a bigger way, in a way that the Germans are very reluctant to let it do, to help resolve this crisis.
How will these election results affect Australia?
If we do see a significant increase in risk aversion in Europe following these election results, then it's going to mean concerns about slower global growth. That could certainly mean commodity prices might be lower than they would otherwise be, could push the Aussie dollar down as well. That's not necessarily a bad thing, of course, if you're in a business that's sensitive to the Aussie dollar. So I suppose you could say that it's not all bad news for Australia.
James Shugg, thank you.
Thank you.